All right, ladies and gentlemen. So we have had a massive drop in the market on Friday because of Donald Trump tweeting about China and how there are some strange things happening with China. They are becoming very hostile, sending letters to countries, talking about imposts or talking about export controls and export controls dealing with the production of rare earths. Now, China does own majority of the rare earths in the world, so they do have some power in this case. um, so yeah, we're back to having some trade wars and trade talks and all that stuff between U.S. and China, and the market reacted very negatively. So if you want to read the whole thing, you can pause the video and read it. But that's basically the gist of it. Now, to me, this is just a fluff news. It's a news that we've kind of seen in the past. There's been a bit of a break when it comes to U.S. and China trade wars. So after a while, getting a tweet like this, market reacted aggressively. This isn't something that would create a massive crash in the market. I think this is just two countries taking positions to see how each one reacts, and then ultimately they're just going to come back to a negotiation and blah blah blah. That's basically what I think is going to happen. Because if they don't, like, China is going to lose a lot of profits and a lot of money, and the US is going to have the same issue. So no matter what, they're both going to agree with each other ultimately and negotiate and find ways to come to a solution together. So that's just the way it works, because both countries aren't stupid. They're gonna lose a lot of business if they don't agree on any of these things. That's basically it. So yeah, that's why the market dropped. Now things get really fun. So in this video, what I'm gonna do is I'm gonna talk about the SPY and what I'm expecting the market to do this upcoming week. I'll give you 3 stocks that I'm looking at for potential trades this week. And at the end of the video, I'll talk about the challenge account, which we started last week, October 6th, and how that's been doing and how you can follow along with it as well. Let's begin. So to start things off, we have the market. And the market dropped a lot. And I talked about this right here. You see this arrow right here? This is where I made a video, which is still on my YouTube. That's the last video that I made about the market drop. And essentially what I was looking for was a drop like this. Now, my target for it was 650 to 655, which we actually did drop down to 655 here and then bounced, but I was still very bearish here. And in my live sessions with my members, I talked about how I am still bearish. I don't like the longs. The longs aren't easy, and we've played more puts this week than calls. And one of the things I talked about at the beginning of this, this last week, October 6th, I talked about VIX, and I talked about how there's going to be a moment when VIX explodes because the market is dropping aggressively and volatility comes back. I've talked about how, VIX has been rejecting, and as long as VIX is rejecting, things aren't going to be aggressive. Market isn't going to drop yet. And then, for me, I was just looking for another red day. I was just looking to see if flow tells us more red. Now, on this last, I keep saying this, but last week, the semiconductors, NVIDIA, AMD, were doing very well, and they kept the market up for a bit. And even with that, market, especially SPY and QQQ, still had red days. Even with the semis being so strong and the techs doing pretty well, we've had more red closes than green. I think last week the only green day was Wednesday. Thursday was another red day. Tuesday was a red day. Monday was a sideways but closed red anyways. So we kind of see a little bit of a topping. Like, it's getting harder and harder for the market to push higher without any pullback, without any decent pullback. So getting this big pullback is very healthy, and it makes the long very easy. Call options become a lot easier to play, which we could be doing this upcoming week. Maybe even Monday, market bounces back up. You never know. It could be related to news. Maybe China and US comes to a deal about rare earths and so on and so forth. So there is lots of scenarios that can happen. We're gonna be getting a lot of volatility because of it. For me, this upcoming week, I'm expecting more downside from the market. Most likely, maybe Monday we gap down and we come down to 645 support or 640 support. But we have come down to this blue EMA cloud multiple times, and we have bounced. We've bounced here, we've bounced here, we've bounced here, we've bounced here, and we're now back to that 650, 655 zone where we bounced before. So will Monday be another, day, another bounce area like 655, 650 like we bounced before? In Monday, are we going to bounce again around this zone? I don't know. Maybe. Or are we going to break below 650, below this blue EMA cloud, and then head into 645, 640, and so on and so forth? That's what I'm looking for. So it does come down to how pre-market looks and the overall market flow in general. But I still feel as though until we get this China and US thing, the deal, the negotiations to be good or positive, I do think market's going to have more downside this upcoming week than, green, than bullish. So that's what I'm looking for. But ultimately, it just reactive trading, right? Just because I predict more downside doesn't necessarily mean it's going to be more downside. If I see bounces coming in, I will be playing calls, as I always react to what the market is giving me on the day that it's moving. That's how I will be playing it. So we'll see what happens. What I do like, however, is that volatility is back. VIX is above 20. So VIX did break that 1750, went above 18 and exploded. So very happy with that, because now the volatility in the market is big. And if VIX can somehow explode to 25 zone, break through 25, well, guess what? The volatility becomes monstrous. Okay, the volatility goes crazy after that 25 level. We just explode to 30, 35, 40. It becomes crazy for VIX. And what ends up happening is the volatility on SPY and QQQs and the overall market increases, making trading options extremely easy. So that's what I hope happens. We'll see. But this week, this upcoming week should be a really fun week because of volatility coming back. We got a 20-point drop almost on Friday, and there's a potential, bounce back up 20 points, back to all-time highs. Could see more downside, creating more volatility, and it just becomes a lot of fun to trade. Now, moving on, I'm looking for the three stocks that I consider to be really good this upcoming week. The three stocks I think are going to do very well. Number 3 is Palantir. Palantir has a setup. Now, this is kind of dependent on if the market is going to be green or red. If it's more red, then Palantir is most likely going to be following to the downside, which evidently, because it's in the S&P 500, I believe. Yeah, it's going to follow the market. So if market is red this upcoming week, I don't expect Palantir to go up. So in that scenario, I would just say short Palantir. If market is bearish, short it under 171. Because if it falls under 171, it's most likely going to go to, in my opinion, roughly around 163. That's the next big support. So watch out for that. However, if market, let's say, comes back this week and starts bouncing and goes up again back to all-time highs, if SPY is going back to all-time highs, well, you're just looking for a Palantir to bounce back up as well and get its all-time high breakout above 190. If Palantir breaks 190, well, simply put, you're going to run to 200. That is a free 10 points. All-time high break, 190 breaks, 200 is your target. Make sure you take time on your options, maybe a month out call options or 2 month out call options, $200 strike. Pretty easy, pretty standard, assuming it breaks 190. Will depend on how the market is, but it's a good chart setup. Number 2, this one, in my opinion, has a lot of potential. Tesla. So Tesla, if for instance the market is very bearish, well, what we can do is we can short Tesla, especially if Tesla is bearish. We can short it under this level right here, which is around 402, maybe 400. Under that level, we have gap all the way down to 368. That is a fair value gap. Okay, this entire push of a bullish candle that you see, well, if 400 breaks, Tesla's going to fill that bullish candle down to 370, 368, 370. And that is like a 30-point move. So I would very much like to even catch like half of that. even just 10 points of that is good enough. Like 400 to 390, I'm more than happy with that, because that is going to be a good profit. Watch out for this. That could be very, very possible, especially if the market is bearish. However, if market is bullish and Tesla comes down to this $400 level, watch out for the bounce, because this $400 level is a big support. It is the EMA, blue EMA cloud support, as well as a whole number support. So it's a pretty big support for Tesla. If 400 holds, expect to bounce back up all the way to 488.68, which is for Tesla all-time highs. Now, the last time Tesla hit this level, it was December of 2024. So it's been a good 10 months plus since Tesla hit all-time highs. So if Tesla can get there, all-time high setup, and then if that break of 488.68 happens, well, easy $500 level. So that's about a 12-point move on the upside if it does end up happening. Good setup on the long, good setup on the short. I like what I see, and I will be watching it closely. The final stock is App. And I'm not going to lie, looks really ugly. App, to me, has potential to drop down to the support at 525, which is, a good amount of downside. For me, what I'm thinking is, does App have the potential to drop to 550, 545, and then if it breaks that 545, can it go to 525? And then under 525, we have a little bit of a gap right here to roughly $507.87. So the potential to the downside is very, very nice. Now, it is on a downtrend line. So you can draw a downtrend line like this. It's EMA, which is the green EMA that you see right here. The green EMA has officially turned red, and we have a EMA crossover, which signals bearish momentum and downside move. And if the market is bearish, then you can actually short this stock down even more. On top of that, if you go to the 4-hour chart, you'll see that it has kind of had a nice bounce here at 545, topped off right around this candle around 650, and then following the red EMA cloud, it has slowly come back down, getting close to that 550, 545 level. So under that 550, 545 level, well, it's going to be a big break, because this is a bear flag. It is a bear flagging on the downside, and to me, that looks like basically most of the technicals on this stock is bearish. All you need is just break 550, 545 and short it. So to me, this is just a very easy short setup, especially if market is bearish. On the long side, if you get the downtrend reversal above 650, go long. In between, you can play like, I would say 600 break for 650, 650 break for 700. That's basically it. I'm not really leaning towards long on this one. I like this more as a short, but we'll see what it does. It has been very volatile, and I think there's potential for more volatility on it, and the downside just looks very, very appealing, so take advantage of it. All right, with that, the last thing is the challenge account. If you want to catch the, every single trade that I put out on the challenge account, I put it out on my alert room in my Discord group. Link will be in the descriptions below. You can use the code SALE50 for 50% off on the first month of the monthly subscription. Basically, we had a great start to the challenge account. First week, we're up 76%. Account started with 1,000. We're at 1,760. So really, really good start. And we've been following very specific rules. Even though we have some losses in between, we are still up on the account because our wins are more than our losses. And that's called consistency. How do you become consistent? Well, I've made some rules. Follow these rules, you'll be consistent. 5 simple rules, nothing complicated. Yes, I can make it to 10 rules, 15 rules, 20 rules, but these are 5 that just makes you more consistent in general. 1 to 2 contracts until you grow your account to 5,000, after which you can do like 5 contracts. Sell at 20 to 30%. The reason most of the time you're going to be doing 2 contracts is you're going to sell one of them at 20 to 30% and secure some profit, and hold the runner with stop loss at break even, which if the runner goes crazy, you can make a lot of money on it. Very less swings. Occasionally I'll do a swing, but more focus on day trades because you can control what happens with the trade. No more than 10% of the account per trade. So if you have $1,000 account, your maximum trade per options trade should be $100. Sometimes you'll break it, because I did, because it is a small account. Staying 10% on $1,000 account is very, very tough. But this becomes a lot easier once your account grows. And as your account grows, you start maintaining this rule a lot easily. And you also just don't ever get to 10%, because, as the account grows, your size is going to be less than 10% due to the fact that your account has grown so much. And you're going to see, like, you're playing $5,000, but your account size is 100K. So that's about 5%. You don't really need to go $10,000 and risk $10,000. So as the account grows, so does your size. And you still maintain this 10% rule. Okay. Last but not least, this is probably the most important one. And it depends on you where you stop out. But there's one ironclad rule here. Now, 30% stop loss is pretty much where I would say most of the trades should be taken. But if you think the stock has potential of a bounce, your maximum stop loss is 50%, no more than that. As soon as 50% hits, you just get out. No questions asked. Get out the position, save your money. You'll see that the 2 losses I've had this week were these 50% losses. One of them was on SPY. It was minus 50%. And right here, on the 8th of October. So that was on Wednesday, because Wednesday was a green day. So I had to stop out of the puts as market was turning and market was green. I stopped out of the puts at 50%. And the second one was on Friday, which was our app trade. And I stopped out for 55%. I could have made a lot of money on this app trade, because app did end up dropping massively to my 570 puts. But I sold it very early in the morning due to the fact that, I didn't trust it at the time. And the news that came out from Trump came out very late. So I did end up losing. But at the end of the day, I still made it all back and then some, because IWM puts paid 75%. And then the SPY 1 contract paid 500%, which made like $200, $200 actually. So yeah, ended up making all of it back and then some. So great stuff from the first week of challenge account. Our goal next week is to just get above 2,000. That's the plan. And we'll stick with our rules as best as we possibly can. So if you want to catch each and every one of these plays, the alert, all of them, every single one of the trades that I take on the challenge account, the alert goes in the alert room. All right. I'll see you guys on the next video. Have a wonderful rest of your day. Peace.